All right, everybody. As we get everybody in here, I'm going to let everybody kind of filter in first. We are doing our GBUS 10 for both my classes, Monday, Wednesday. Quiz 5 or the final exam, the study guide for it. So as you filter in here, I will leave the study guide up to show you exactly what we're going to be going over. And as you do that, let me pull up some more information. And we'll continue in just 1 second. So let's get people filtered in here. All right, if you're just joining us, we are going over the GBUS 10 Personal Financial Management Final Exam Study Guide. I'm going to go over that in just 1 second. I'm waiting for people to filter in here. Loading up my information, and we will get started in just 1 second. Got 2 people in here. Good. All right, so as you can see over here, we have the Quiz 5 Final Exam Study Guide for our GBUS 10. And one thing that you'll notice with it is that I broke it up in a nice little pieces for you, right? I broke it up into nice little pieces for you. So we got 2 people here. Good. If you have questions, just chat them in here. So we could. Sorry. Hold on for just 1 second. There we go. How many people we got now? Still 2? All right, let's get started. I'm not going to wait for anybody else to come in here. So what we have here, it says GBUS 5 Chapter 10 Study Guide. So, chapters 11 through 14 Study Guide. So what are some common investment objectives? We talked about this in class on in Top Hat, and it's basically asking you, if I gave you a list of investment objectives, would you be able to point out the ones that maybe isn't the least likely investment objective? What are some investment objectives? So again, look at your Top Hat. What are some of those investment objectives we have? What is a diversified collection of portfolios? And I'll give you a hint. We finished it up today, right? We finished that section up today and yesterday before we got into retirement. It was the last section before retirement and IRAs and 401ks and stuff. So what is it when I ask you about a shared diversified collection of securities? What could that possibly be? What is the difference between investing and speculating out there? What is the difference between investing and speculating, right? Remember, investing, you're taking a lot of information. You're finding out what some stuff is that's stable, that's an analysis, that is considered maybe very predictable, compared to speculation, which is highly non-predictable, right? Very unpredictable. So know the difference between those 2 things. What is the difference between a bull market and a bear market? So I talked about this in class. Think about how a bull attacks somebody. A bull rams its head up, right? It rams its head up. A bear claws its way down. claws its way down. Physically think about it. That's how it physically became about. So in a bull market, prices are rising. In a bear market, the prices are collapsing. We are in a bull market right now. You may be hearing financial investors talk about us having a bull market. We're in a bull market right now. And then right here, it says, be able to understand the summary page of a stock price on Yahoo Finance. So this stuff is pretty easy. This stuff is pretty easy when we look at it. So the market price of the stock, it's going to be that big one right there, right? 176.06. That should be something that you know just instinctively. If somebody asks you, hey, what's the price of Facebook? Okay, in this screen cap, it's 176.06. That's the market price of the stock. If somebody tells you, what's the stock's PE ratio? Well, it says it right there, PE ratio, 39.4. And what that means is that for every dollar of earning, right, for every dollar of earning, they're wanting to understand, the investors are wanting to get back. This means that investors are willing to pay more than, in this case, $39.4, or 39 if you rounded it to the nearest dollar, $39 for every dollar of earnings per share that the company generated last year. So that's what we're talking about with the PE ratio, that we're really getting and calculating out what, based off of the price, how much is the investor willing to spend for that $1 of earning, and they're willing to spend about $40, $39 for that $1 a share, right? What is the last price on the previous trade day? Well, that's easy. It says previous close, 172.83. So you know that that's where it closed at yesterday. And it's different from the opening price, because the opening, there is after hours trading. But you see it's very, very little because the markets are closed. So it closed at 172.83. Stock's dividend yield. So the dividend yield, the dividend yield on this stock, unfortunately, it doesn't show what it is, right? This one doesn't have a forward dividend and yield dividend date. It doesn't show it because I don't believe Facebook gives out dividends. If a company gave out dividends, they would be able to know what it is. You would be able to calculate the dividend yield. And so when you look at this, when you look at the dividend yield, you're looking at the percentage, right? Not the dividend. So if I gave you the question on the test, and right here it had two numbers under the dividend yield right here. Let's say it said dividend 1.15, and then in parentheses it had like 1.1%. You would do the percentage. You would do the dividend percentage, the dividend yield. What is the highest and lowest price during the 52-week trading period? Well, that's easy. You go to 52-week range or 52-week trading period. And you know, the lowest is $114.77. The highest is $184.25. So that's the highest and lowest price. And then right there, the market cap of the firm, market capitalization, market cap, easy, $511.597 billion. That would be the market cap of the firm. Very, very easy, very, very simple to go through. So that is all of Chapter 11 that will be on the exam, right? And again, if you have questions, chat them in here, so that we know what they are. So Chapter 12, if we look at Chapter 12 now, and we're wanting to figure out what to talk about for Chapter 12, do securities involve risk? Now, I'm talking about every security out there, right? Every security out there, whether it's a T-bill, whether it is a stock, a bond, a mutual fund, an IRA, and 401k, a Roth 401k, whatever it is, mutual fund, ETF, there is always a risk. There is always a risk of something. Now, T-bills, they may have such a low risk that we call it the risk-free rate, because no matter what, you'll get it back. But really, everything involves a risk, right? There is a possibility that tomorrow you wake up and the federal government is dismantled. That possibility is very, 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 very little, right? So is it probable? No. Is it possible? Yeah, anything is possible, right? And that's what we're talking about. There is a risk to anything. There is a risk for you walking down the street. Would you think it's a high risk thing compared to like skydiving? No, but there is a risk. There is a risk to everything. What institutions issue bonds? Where can you go and you can get bonds, right? So remember all the things that we talked about with the bond market. Where can you go to buy bonds? That is specifically in Top Hat. That is what we talked about, where you could find bonds. Go look back on the readings. Go look back. Where can you physically buy bonds? Where are the different categories of bonds out there? We look at the next one and we say, how are bond prices impacted? How are bond prices impacted? So meaning this, bond prices are impacted by a couple things: the direction on which the bond is going and the magnitude of interest rate change, right? The volatility of the change. So their bond prices are impacted on that type of stuff. So it is impacted on the direction and the magnitude of change. Where is the risk-free rate usually derived from? Where is the risk-free rate usually derived from, right? And we're gonna say, where is it derived from? Well, it's a government bond, so I'll let you go and figure that out, but it starts with a T, right? It starts with a T. If we had to classify bonds of junk bonds, what would we be looking at? If I gave you a list of bonds, now mind you, I said in class that junk bonds were like letter D or triple C or anything like that. However, if I gave you a list of bonds and there weren't letter D, how would you know which one would be the junk bond with the collection of bonds that I've given you, right? So junk bonds are always the lowest rated bonds in a series. So what is, you have to know the rankings from what's the highest to what's the lowest of those bonds, and that's in your Top Hat as well. Understand the risk relationship with bonds and bond pricing. We went through this in depth in class. I mean, we talked about it. We have a Top Hat question that I went through. But a bond selling, like if I asked you, if a bond is selling below par value, what is that called? Or if a bond is selling above par value, what is that called, right? Understanding what those terminologies mean. And then these bonds right here. So you're going to know the difference. Oh, and this is stocks as well, right? Chapter 12 is stocks and bonds. So know the difference between cyclical, growth, blue chip, defensive, and speculative stocks. That's easy. Just go in your book. Look those up. You have cyclical stocks that go in a cycle based off the stock market. Growth stocks that have a high rate of return, 15-20%. Blue chip, your big companies that never leave, your IBM, your McDonald's, your GEs. Defensive stocks that act in your favor when the stock market goes down, these stocks go up. And then speculative stocks that are very unpredictable and everything like that. So knowing the difference between those. And then calculating the approximate yield. Now, I'm not going to go over this in this study guide because I made a separate YouTube video on it. I emailed it to you. So if you decide not to watch it, that's up to you. That's your deal. But I would highly suggest you check out that video. I've already got about 30 views on it. Mind you, there's about 60 students in the class, so at least 10 of you didn't see it, and probably some of you seen it multiple times. So I'm guessing maybe about a third of the class, 2/3 of the class saw it. So get on it, right? Watch that video, understand how to do it. I made a separate video just for that. So really there's like 2 study guide videos out there, one on the calculation portion, one on this. So calculate the approximate yield. Same as Top Hat and homework assignment completed in class. And the homework assignment we did was your approximate yield as well. So that's chapter 11. Let's go to chapter 13. Let's go to chapter 13, the mutual funds. We finished this one up today, and we started retirement. So let's see chapter 13 real quick. So chapter 13, what is a mutual fund, right? Define the mutual fund. Do you pick the securities or does somebody else pick the securities? What is that, right? Define the 12B-1 fees. We went over this all today. And this was a Top Hat question. You know, marketing, distribution expenses. Why do investors invest in mutual funds? That was another Top Hat question, right? We did that one again today in class. We did that exact same question today in class. Why do investors tend to use mutual funds? Why do they pick mutual funds? What do both load and no load funds will always charge, right? What do both no load funds and loads always charge, right? Now, remember, the 12B-1, those are majority yes. But, I mean, I'll give you the answer to this one because I didn't really clearly define it in class. Management fees, right? Management fees are what no load and load funds always charge. So define your management fees out there. Define an automatic reinvestment plan, right? Define the automatic reinvestment plan. What is an auto reinvestment plan that we talked about in class today? What does it mean to reinvest in the fund automatically? And then benefits of a mutual fund regarding management of a fund. Meaning this, you buy into a mutual fund because of somebody managing it, right? It's your manager. So make sure that's there. So make sure you understand why you would buy into that mutual fund out there. What's the point of it when you invest in a mutual fund? So that's chapter 13. Let's go on to the last one, chapter 14 real quick. Chapter 14 states, what are the major sources of retirement? And again, that was a quad. I put that in a quad format on the top hat. It was a little quad, and it said government, pensions and retirement, Social Security, your earnings, right? All this different type of stuff. What are some common mistakes people make when planning for retirement? So we didn't do that one on a top hat question. I don't know why I put that there, but what are some common mistakes when dealing with it? I mean, think about it. Think about just for you. We've talked about this in class, starting too late, assuming too much risk, having too little when reaching retirement, putting away too little. What are some of these risks that you could see, right? Do household expenses decrease or increase after retirement? Now, think about retirement stuff, right? Think about what it is. It really makes a difference whether you start retiring. Does it make a difference when you start retiring and when you start retirement savings? So what's the answer? The answer is duh. Of course it makes a difference, right? You start earlier, you can compound your interest more often. Household expenses usually increase or decrease after retirement, meaning because you're on a fixed income, there's not money coming in, so therefore you need more money to actually do stuff. So yeah, it would. Household expenses, they don't usually increase. They actually decrease because you are on that fixed income, right? You're on those fixed incomes, so you actually probably will spend less at home because you're not having to work, and you're not having to do a lot of the extra stuff that you would have to do to keep up your household expenses. You're probably going to sell some stuff off to make up the difference. And then what is typically the normal retirement age? When we talked about in class today, what's the difference? What is the typical normal retirement age and all that different type of stuff? What is that, right? What is that typical retirement age? And it's in the 60s, and I'll let you decide what you want to do with that. So hopefully this session helped you out. If you have any questions or comments or concerns, please let me know. Please email me. I didn't have any. I don't think I did. Let me check my chat real quick. Didn't have anybody chat in, so that's always good. If you guys don't have any questions, it's there. But if you need to, reread the sections, make sure that everything's there ready to go, and you should be good for the final exam on tomorrow if you're in my Monday, Wednesday, or Thursday if you're in my class on Thursday. So with that, I will sign off, and I will see you later. Have a good one.